On Wednesday came the news that ChemChina had sealed the biggest piece of outbound Chinese M&A in history, its $43 billion acquisition of Syngenta of Switzerland. Arash, this comes after Syngenta tried to buy DuPont's seed business, Monsanto tried to buy Syngenta, and Dow and DuPont merged. What is going on in the chemicals industry?
Well, it's a bit of musical chairs, and Michel Desmarais, the key man in all of this, the protagonist, the chairman of Syngenta, had predicted in an interview just 3 months ago that the industry would look completely different in the course of a few months, and he was exactly right.
Right. So what's driving this? Why the need now, after many years where there was sort of a series of dominant players in the industry, are we getting into a smaller, tighter group?
Fundamentally, agricultural prices and the downturn in commodity prices have hit farmers as well, and have hit products that farmers use. So seeds and crop chemical protection, which is what companies like Monsanto and Syngenta provide. Syngenta, a leader in the crop chemicals business. But as farmers' budgets have fallen, so have their purchases, and thus this virtuous cycle where profits are down.
Classic consolidation to protect profits with cost cuts and efficiencies and hopefully revenue synergies and so forth.
And this absolutely dramatic sort of succession of events. Hugh Grant, charismatic chairman of Monsanto, sort of Scottish-born but pure American in attitude, tries to buy Michel Desmarais' Syngenta, a very European, Swiss company. The formation of Novartis and AstraZeneca's chemicals businesses from 2000. And now this, ChemChina out of nowhere, $43 billion cash.
Now, any $43 billion deal is hard to finance, but this is a particularly interesting case, right? Because the buyer is a Chinese state-owned entity. What do we know about the financing of this deal?
Well, the financing is amazing, and it sort of captures the role that Ren Jianxin, the chairman of ChemChina, has played in the last few years of running that company. It's been highly acquisitive. It bought Pirelli in Italy, and now ChemChina, now Syngenta. These are blockbuster deals. The transaction will see ChemChina get $30 billion in bridge financing from CITIC Securities. I've never seen them provide a check of that size on a deal. And HSBC, another $20 billion in bridge financing. And after that...
Yeah, that's the question, right? I mean, the bridge financing is one thing, but somehow they've got to fund $40 billion of business here.
I've spoken to Michel Desmarais. He says ChemChina is planning to sell equity portions of the business to help finance the deal in the long term and issue debt, which will be syndicated out by big banks.
So they better hope that the market is acting better than it's acting now when it comes time to sell those equity stakes. Exactly. And I guess the last tough question here is, are regulators going to raise any objections, either on antitrust grounds or on sort of national security grounds, food being a kind of nationally important asset?
It's amazing because many times in M&A stories, and especially in these mega deals, it's always been the story, what will the Chinese regulator say on a deal? Right. Well, the assumption here is the Chinese regulator won't be a problem, and antitrust shouldn't be a problem. But the question is, with crop chemicals and food security being such a big part of this transaction, will Syngenta in Chinese hands raise the eyebrows of U.S. regulators, specifically at CFIUS, the Committee on Foreign Investment in the U.S.? They blocked the Chinese deal last month between some private equity investors who tried to buy a business out of Philips on national security concerns. And the big question is, will they do that here?
Many thanks, Arash.